This video will demonstrate the opening inventory. We're going to concentrate on the average cost, and they're both the same. Average cost or FIFO, the accounting concept is exactly the same. You notice that the opening inventory for both cases is zero. That's because it's the first year that we started the corporation and our opening inventory is zero. Now, at the end of the year, we counted 246,500, and you note that this amount is on the income statement as a credit balance and is also the asset on the balance sheet. Let us demonstrate this using Sage Accounting. When we go to our reports and our income statement for the end of the year, December 31st, 2014, just want to show you that we have ending inventory of 246,500, and if you want to look at the GL, it's a credit balance, exactly the way we processed the ending inventory in the prior video. Now, we will start a new year, and I have to do all this. Now, if I go to my reports and I go to my financials and I go to my income statement, you will note that all the temporary accounts are close to zero. What happened to the profit? Well, if I go to the balance sheet and I go to the 1st of January because our year end was December 31st, and I go to the retained earnings, you will note the 231 retained earnings was accumulated and we have 231,900. So our profit went into our retained earnings. If we look at the balance sheet, you'll note that we have 246,500 as an asset. Well, whenever we use the periodic method of accounting for inventory, this asset has to be transferred as opening inventory on the income statement. How do we do that entry? Very easy. We go to General Journal. On the source, we write opening inventory. Here's a comment you can write to record opening inventory. The journal entry will be debit. I know the account number by heart, 5050, which is opening inventory. This account will go on the income statement, and it was 246,500, and we will credit the ending inventory on the balance sheet, 1520. The moment I process this transaction, I'll just give you another visual. It will debit the inventory opening on the income statement and building bricks inventory credit on the balance sheet. The moment I process this transaction, look what will happen. If I go to my reports and I go to my income statement on the 1st of January, obviously I have no sales, but I have a debit balance in my opening inventory account. If I click on it just to demonstrate to you, it's a debit balance. Debit balance means like I have an expense. I have done nothing as a sale or as revenue, it's zero. Just by posting that transaction, I have a $246,500 debit, which a debit, we all know, is a loss. This is not a net income, it's a loss. But using the periodic method of accounting, you can only determine your gross profit once you take a physical inventory count. But this is the process that you must do. If I go on the balance sheet, and I will do this right now, if I go to the balance sheet, I will say show me all the zeros. If I go to the bricks inventory, and if I can find it here, building inventory bricks, you notice it's zero, the amount. This is because we transferred all the asset of inventory on the income statement. At the end of the year, we will perform the same journal entry that we did to record ending inventory. And to record ending inventory, it will be debit building brick inventory and credit ending inventory on the income statement. And I will be demonstrating that momentarily. Thank you.